My name is Alexis Rogers, and I'm the Customer Relationship Lead here at RightCapital. And I want to welcome you to our webinar today on creating your first plan. Now, this webinar is devoted to equipping you with the tools needed to start to build your client profiles in RightCapital. And in today's session, we are going to be walking through how to actually build out the client plans, of course, but also how to first get yourself set up as an advisor, a couple of things when it comes to adjusting your branding and how to make sure that your assumptions are in line with you before you even begin to create client plans is going to be our first step today. So we're going to walk through what that looks like, and we will also look at the idea of how to engage a client in RightCapital and invite them to access their plan if we are looking to engage them in that capacity, of course. Now, towards the end of the conversation, we are also going to be diving into the different resources that you do have available to you when leveraging RightCapital. One of those resources being that during this webinar, if you have any questions, please feel free to use the Q&A section to type out your questions there. More than happy to answer any questions you might have. Now, switching gears into RightCapital. When we first log into RightCapital, we are brought to what is called our advisor dashboard. Now, this is where we are going to be taking a lot of different actions. This is where we can go to start to create a client plan, invite existing clients, and also a lot of advisor management stations are going to be found in your advisor dashboard. Before we even begin to create a first plan in RightCapital, it's first and foremost important that we first set up your profile as an advisor. To do so, we would stay in the advisor dashboard, but we would navigate to the gear icon in the upper right-hand corner and then select the account button, and that will then bring us automatically to our profile. So under gear icon account, your profile is going to be listed here as the advisor. And if you haven't already done so, just take a couple moments to fill out this information because what we put in here is going to be exactly what displays on the cover page report of a PDF. So if your phone number is not 555s like mine, you want to make sure you make that adjustment from here. Same thing for your name, your firm address, and a couple other things as well. The next thing that we can adjust is going to be what we specify for customization. So staying under gear icon account, if we click into the customization sub-tab, this is where we can go to establish our branding in RightCapital. Now, what we establish here for branding is going to be relevant across all capacities that you are building RightCapital into your life, whether it is your own experience, the client experience, or doing any sort of presentation in RightCapital. Your branding is going to be displayed across all of those different manners of using the system in general. The first thing that we can adjust for our branding here is going to be what we use for our logo. So if we wanted to update and upload our own logo, what we would do is we'd navigate to the logo section, and if we click on the update button, that's going to open up a field that allows for us to drag and drop a file into this space, or we can select a file to upload from our computer or choose to upload from one of these various sources on the left-hand side. Now, this is going to have to be an image file, so it's going to have to be a JPEG or PNG file that we can upload from here. Once we have established what we want to use for our logo, the next thing that we can adjust is what we want to use for our color theme in RightCapital. So right now we are using the defaults in RightCapital, which are the white and beige colors. And this is going to be what we see when we're clicking throughout the different modules or tools in RightCapital. Right now, like I said, we are using white and beige. To start to adjust our color theme, we have a couple different options for how we can achieve what we want to see for our color theme today. The first one is being able to enter a hex code if we have one. So if we do have a hex code, we can enter that into the field here for primary color. The hex code being that random string of numbers and letters that represents the color code. But if we don't have a hex code, it is no worries because we can simply click on the hashtag directly to the left. That's going to open up a color wheel that allows for us to then select and play around with what we want to see for our color theme for today. Now you'll see that as we are making adjustments to the color theme, there's a preview down below that showcases to us what it looks like if we save this color theme and we're navigating throughout the software. And we can do the same thing for the secondary color, whether we want to enter the hex code, use the hashtag and the color wheel, or we have the final option at the very bottom, which is this color selector tool. Now, the color selector tool allows for us to choose a color that is on our screen and pull from that color code essentially. So for example, if I did upload my own logo and I maybe wanted to pull from that color theme, I can just go to that logo. But let's say we just wanted to pull from RightCapital's blue. I can select that color from my screen, and we see that the secondary color has also updated to reflect that RightCapital blue. And we also see that preview down below. Now, if we like what we have accomplished here, we can hit the save button, and then we'll see that as our color theme going forward. Now, if we want to reset back to the defaults of white and beige, we can hit the reset button and it'll be resetted for us. But now that we have the baseline information for our advisor profile and the branding of our profile in RightCapital set up, there is two more things we want to make sure we're adjusting and addressing as needed before we even begin to create a plan in RightCapital. This is going to be found under the three dots in the upper right-hand corner. And the first thing we're going to be reviewing is integrations. So under three dots, integrations, this is where we can go to start to set up some integrations that are intended to streamline the data entry process for you, especially as we're looking at creating new client plans. Whether we are looking to set up an integration with a CRM partner, maybe it's RedTail or Wealthbox to bring over that household level information, or if we're trying to connect an asset custodian that you leverage, maybe it's Charles Schwab, Fidelity, to bring over those account level positions and have some direct data feeds, all those different integrations can start to be set up from here within the three dots integrations page. Within the integrations page, you're going to see here a long list of partners that you can select from. So if we're looking for somebody in particular, we can either scroll through the list or use the search field to search for that specific partner. So for example, if we are looking to connect to RedTail, we can select them from the list or search for them like I just did. You'll notice that as we select any integration partner, the right-hand side of the screen is going to populate with step-by-step written instructions for us on how to get that integration set up. So for RedTail, that is pretty straightforward. That is simply us just entering our RedTail credentials and hitting connect. But for other partners, the steps might look a little bit different. But in any case, and with any instructions that are needed, you will find all of that listed underneath that integration partner here. You'll also find another resource easily accessible within this page and throughout each partner listed, which is going to be at the very bottom of the right-hand side of the screen, which is this blue hyperlink that you can click into that will bring us to our Help Center article that is devoted to that integration. Now, this is a very convenient resource to have just easily accessible on that page because this particular article will cover three different things that are important to understand with each integration. The first piece is going to be addressing what the integration itself does for you, what it brings over. The second part is going to be addressing, in other terms, how to get the integration set up. So if you're looking to have that in a separate tab, you can access that from here. But the third thing is going to be how to actually use the integration once it is set up. So it'll walk through all those instructions for you. And whether you already have the integration set up or not, you will still be able to access that particular link. And I want to note that this is just there for your convenience. Towards the end of this session, we are also going to be highlighting how you can independently find your own resources in the Help Center, whether you're looking for this integration article or something different. But in any case, you will find it throughout the advisor dashboard. When you're looking at your advisor management stations, you're going to find a lot of hyperlinks there that's available for your convenience and your ease. The next thing that we can adjust and also should be reviewing is our Assumptions tab. So under the three dots Assumptions tab, this is where we go to make sure that we're first addressing what we want to use for a lot of the vital assumptions that are going to impact the projections in RightCapital. So here we can address return assumptions, inflation figures, and a couple miscellaneous things as well, starting with what we want to adjust for our return assumptions in RightCapital. So under three dots assumptions, we'll see the asset return tab that we're currently defaulted into. And within the return assumptions, there's three different options that we do have available to us. The one that we have currently selected is historical index returns. So for historical index returns, what this is going to be looking at is the past 50 years of indice data were applicable for each of the asset classes, and this is pre-filled based off of that study. So this is updated and reviewed on an annual basis, and these figures for capital gains, dividends, and interest are going to be pre-filled based off of that study. The second study that's available is the forward-looking assumptions for JP Morgan's study. That's also going to be updated and reviewed on an annual basis. And the third option is for us to be able to employ customized returns. Customized returns allows for us to specify what we want to use for capital gains, dividend, and interest where applicable for each of the asset classes. If we're looking to use one of those studies, we can simply toggle to it. Today, we are going to be using the historical indice return, so we're going to leave that selected. But you'll also notice if we scroll to the very bottom of this page, there's also going to be another hyperlink available for us to be able to select into that's going to provide us with those studies. So if you wanted to do a deeper dive, you can access that from there. Up next under the Assumptions tab is what we want to run with for inflation assumptions. So under inflation, this is where we can adjust what we want to use for general inflation figures, healthcare cost inflation figures, education cost inflation figures, and also Social Security inflation, also referred to as cost of living adjustment or COLA, and also tax inflation as well. And under miscellaneous, this is where we can adjust a couple miscellaneous assumptions, such as cost of purchasing and selling real estate property. This is typically those appraisal or closing costs associated with the acquisition or relinquishment of a property. And then another very important assumption is the living expense reduction that will happen upon the passing of a client or co-client in the plan. This is going to be key for if we are running any sort of life insurance analysis or running with the assumption that a client or co-client is passing away sooner than the other. Now, one thing that I want to note is that when we're here in our advisor dashboard and adjusting these figures, we are making an adjustment to our global level standard for these assumptions. So what that means is that at the client-specific level, we can create custom assumptions for that one client. So for example, if we have a client that we know that their living expense reduction upon the passing of the co-client is going to be a steeper reduction than your standard global level adjustment that we have here, we can say for that one client, we're going to be seeing a customized living expense reduction, and that would be done within each client's individual settings. But a good rule of thumb is that when we are here in our advisor portal and making adjustments to these figures, and we can see things like the clients button, we are going to make adjustments to all of the clients that are using global level assumptions. So it's just an important thing to note that this is where we set the standard as advisors for what we want to see for these assumptions. Now, one of the final pieces that you might be able to adjust under the miscellaneous tab is what we want to run with for the different types of calculations in RightCapital, which are referred to as return model assumptions. So right now for return model type, we do have standard log normal selected from here, but we also have the option to toggle to legacy stochastic modeling. Now, toggling to different options from here is going to directly impact what we were seeing on the asset return page. And we also have the option to control what we want to run with for the different types of calculations for Monte Carlo simulations. So for Monte Carlo simulations, that is that idea of 1,000 trials of market volatility. And for Monte Carlo simulations in general, there are two main ways that those can be calculated. The first one, the one that I've currently selected, is geometric calculations, but there's also the option to toggle to the other method of calculation of arithmetic. So we can make that selection from here. You'll also notice a hyperlink at the very bottom of this page that we can click into to read further information if we're intrigued about any of these different types of options. But now that we've started to align our assumptions with us, we're going to be navigating back to our clients list. This is where we can go to start to create a new client, but I also wanted to review the process to invite an existing client. So one of the things that's very important in RightCapital is that you have the flexibility needed to customize the client experience in RightCapital. And that does include how and when you want to engage the client in the system. So let's say, for example, for the Allen family, the one that I've currently selected, we have already created their plan and we are ready to take that next step with them to invite them to access their plan in RightCapital on the website. So if that's the case, we would select them from our client list. And then we click on the Client Access subtab from here. Now, all three of these subtabs are going to be unique to every single client. When we select Client Access, you're going to see the first name listed here for a reference of the client and co-client. And we'll see two fields here dedicated for us to be able to enter the client and or the co-client's email address to invite them to access their plan. But like I said, it's very important in RightCapital that you have that flexibility needed to customize how the client interacts with the system. So when we are ready to invite them to access their plan, we can just hit this button here, and then further down is where we go to adjust how we want the client to interact with RightCapital. So the first setting here allows for us to indicate how we want this client to interact with their profile items. Profile items being things like their salary, their contributions, their expenses. And the first option is to allow for the client to be able to update their profile information, meaning that they can update things like their contributions and salary. The second option is the client cannot change profile information and will have a view-only experience. The second setting is where we can go to specify how we want the client to interact with the action items of their plan. Action items being what we use to create proposed scenarios or what-if scenarios. And the first option here is that the client cannot change any action items. It's only going to be what you have indicated for their proposed plan, and they have a view-only experience across the board. The second option is to allow for the client to be able to try out different action items, but not save those changes. So what that means is that the client can go in, they can see what it looks like if they retire earlier, they can see how that'll impact their plan and their property success, but when they logged out, it would be reverted back to whatever you have indicated as their proposed plan. The third option is to allow for the client to try out and save those changes into their proposed plan for action items. So you can fully customize this per client, and you can always come back into this space to make an adjustment if the needs have changed. Same thing for planning access. So under planning access, this is where you go to specify what planning tools the client has access to the next time they log in. So this is where we can go to check off that the client should have access to things like their profile. Maybe we wanted to review life insurance analysis, education. We can check off those tools and hit save, and then the client would see that the next time they logged in. Now, it's important to note that you can always come back into the space and make adjustments as needed, because as we know, client needs can change. So maybe today we reviewed education funding analysis for their children, but maybe in a couple years it's no longer a need. So we would remove that from their access and hit save, and they no longer be able to access that module. Same thing if they need to maybe in a couple years talk about estate planning, we can always come back and make that selection as needed. So completely customizable per client. In terms of how the client interacts with the system, what they can see at any given moment is up to your discretion. But that is how we can choose to invite an existing client if we're looking to engage them in that way, of course. The next step in what we're reviewing today is actually creating a client plan. So to do so, we would select the Add a New Client button. That's going to open up a field that allows for us to enter this client's first and last name. So today we are going to be working on the Dwight Schrute family plan. You will also see an email address field here available for us. If we do choose to enter an email address, we can actually choose to invite the client to input information now. So if I selected this button, this would invite the client straight away as soon as I selected this button and would be engaging them from the first step of their onboarding workflow. But as we just reviewed, we can choose to invite a client after we have started to carve out their plan, and maybe whenever we're ready to take that next step in the relationship. So we are going to be choosing to input clients' information now and maybe looking at inviting them later on. So we're going to select input clients' information now. When we do select that button, what that's going to be doing is bringing us to what is referred to as the initial onboarding flow. So right now we're using RightCapital's default for onboarding, which are those 6 initial steps of data entry. This is going to be just walking us through and holding our hand through creating the current plan for the client that we are planning for. I want to note that even if you've already taken an additional step and maybe already customized your onboarding flow, because that is possible, or customize the visual layout of the onboarding flow, the steps and the data entry is going to remain the same regardless. So in any capacity, whatever reordering you might have done, the data entry itself is going to remain the same in any case. But the first and foremost important question that we do address when creating a client plan is going to be step 1 for family. And that's asking the question of who are we planning for. So we will see a client card populated here for us. If we click into it, you'll see the first and last name here populated based off of what I just entered. But with any new client, there's a couple of important pieces of information that we want to make sure is accurate to the client plan, starting with the client's birth date. So right now it's listed as January 1st, 1970. It's not the case for Dwight, so we're going to adjust that here. The next important thing that we will adjust is the planning horizon for the client. Now, the planning horizon is going to be the age at which we assume that the client passes away in the plan. And the third piece that is extremely important to make sure that is accurate is what we select for the residency state for the clients. And this is a very important designation in RightCapital because we have very comprehensive tax calculations, and that does include state taxes. So whatever state we're listing here as their state of residency is going to be considered their state of residency for state tax calculations. So if they're not living in Connecticut, they're actually in Pennsylvania, we'd want to make sure we select that and hit save. Similarly for co-client, click into this card, we can rename the co-client. Of course, if there is no co-client, we can hit the delete button, but that's not the case for this family. We then modify their birth date as well and planning horizon as needed. Now we can also incorporate additional members of the family by selecting the Add Participant dropdown. Here we can add children and grandchildren or other family members. In this case, they do have a child, so we're going to enter the child's name and modify his birth date as well. And hitting the next button, that will take us to our step 2, which is going to be covering the client's income sources, starting with the W-2 salary for client. So from here, we will be able to address what Dwight's W-2 salary is, starting with the annual dollar amount that he's receiving. We also can fully control the owner. So if we did need to adjust it to a different owner, we can make that selection from here. We can also control when the income starts and when the income stops. Now, right now, it's just assuming that it's stopping at Dwight's retirement, but in any case where we might have somebody maybe switching careers or taking a gap year in terms of working, we can model or layer salary cards as needed. We can also adjust what we want to assume for annual increase percentage for the salary and hit save. Same thing for Angela's salary, but let's say we wanted to just indicate what kind of salary this is. Maybe we just want to note that this is Angela's CPA salary. We can title this card just to make it easier for us and just to add maybe that personal touch, and then enter what she's earning and hit save. Up next is going to be the Social Security income cards. So looking at Dwight's Social Security, when we click into this card, we're going to be able to adjust 2 different things and also answer 2 main questions for somebody that is not yet filing for Social Security. So if we're not yet filing for Social Security, we would indicate what we want to assume for the filing age for the client. Now the default is full retirement age, or FRA, which is based off the birth date we entered in step 1, which is why it's important to make sure that that is accurate to the client. But we also can specify that we want to tie Dwight's filing age to either his retirement or we want to enter a specific age. So let's say in this case, we know that we want Dwight and Angela to file at age 70. We can then enter that from here and have it be tied either to the birth month for Dwight or a different calendar month in the year. The second piece is going to be what we want to run with for the calculation type for Social Security benefits. Now the default and the type of calculation that we have selected currently is the use simple estimate option for the estimated benefit amount. When we select use simple estimate, what this means is that we are going to be using their active salary that we just entered to project forward and backwards what the historical covered earnings are to then project what the Social Security benefit will be. But let's say we do actually have a statement from the Social Security Administration. We know a little bit more information in regards to what Dwight should be earning from Social Security Administration's statement. If that is the case, that's when we can use this drop down and then select based on Social Security statement value. When we select that option, we would then just want to make sure that we are looking at the statement and indicating what age we are looking at on the statement. So let's say we are looking at the statement. It says at age 62, he'd be receiving $14.50 a month. We would then enter that into the appropriate fields. One thing that I want to note is that we also have very comprehensive Social Security calculations. So if we are choosing to enter Social Security statement value, we're saying that we're looking at the age 62 on the statement. Yeah, we're indicating he's going to be filing almost as late as possible for him. The system will be automatically calculating any delay filing credits applicable or reversing early filing penalties. So it's very comprehensive, but the most important thing is that you are entering the accurate age on the statement to allow for the system to accurately capture and calculate those additional benefits if applicable. So from here, we will also hit the save button and do something similar for Angela's Social Security. Now, there is a third option for how we can calculate Social Security benefits, which is based on historical covered earnings. This allows for us to enter the historical covered earning record. So if we do have a little bit more insight in regards to what the covered earning record looks like, we can enter that information manually. The final option from this dropdown is to indicate no Social Security. If we select this, we are just indicating to the system we want to completely turn off Social Security calculations for this client in regards to their own retirement benefit, any spousal that would have been calculated, or any outside benefit that they would have been eligible for based off the calculations. It's not going to be the case for Angelo. We're just going to use simple estimate. And we also want to make sure we're specifying her filing age 70 and hitting save. And of course, we can also add additional sources of income by clicking on Add Income. From here, we can add W-2 salary cards. So if we were trying to layer or also specify that they're switching careers, we can add those cards as needed. If somebody's actually self-employed and is not a W-2 worker, very important designation, we can also add that card from here. We can capture pension income, annuity income, distributions from accounts, and under other, we have a couple miscellaneous other sources of income and loans. But we also have the other income card. Now, the other income card in particular is going to be the first of a couple versatile tools that we're covering today. With this card, we can specify how much we're receiving, who the owner is, when this income is starting and stopping. But what makes this a versatile tool is that we can control the taxation for this income stream. So from the taxes drop down, we can indicate if this should be treated as dividend income, earned income, interest, short-term or long-term capital gains, Social Security income, administers housing allowance, or if this is just a tax-free income or a tax credit. Now, this Social Security option is typically used to model things like Social Security disability benefits. If somebody's receiving that, this is typically the card we'd use to model that. And then once we're ready, we can move on to step 3, which is going to be covering savings. Now, with the savings section, this is where we go to address what the client is going to be contributing to their contributions of their accounts, whether it's future contributions from themselves or it's from an employer. So a couple things are going to be available for us to start to carve out that savings options, starting with the 401ks for the client. So if we look at Dwight's 401k, for example, there's 2 different things that we address with each of these cards. The first one is going to be what the client is contributing to the traditional 401k. And the second half is going to be adjusting what the client's employer is contributing to the traditional 401k. So starting with the contribution fields here, this is where we go to address what the client is contributing to the 401k. Right now, it's indicated as a percentage of the salary income, but we do have the option from this target dropdown to actually specify an annual dollar amount for that contribution or have it be set to maximum contribution. If we select it to maximum contribution, we'll see the contribution field will now say max. This is going to be just indicating that Dwight is going to be contributing the maximum contribution allowable by the IRS. This is updated for the most recent guidelines for those contributions, and it does get updated and reviewed on an annual basis as well. So if that's the case, we can keep this selected. And then the second half of the card is addressing what the employer is matching to the 401k. So let's say, for example, we have an employer that is matching dollar for dollar up to 6%. If that's the case, that's when we leverage the primary match 2 and the primary match fields. So let's say we are having the employer matching dollar for dollar. That's when we say 100% under primary match, and a primary match 2 would be 6%. And then from there, we'd hit save and do something similar for Angela's 401k. Let's say that she's contributing 3% of her salary. And let's say that her employer is matching 50 cents to every dollar up to 3%. If that is the case, that is when we would indicate primary match as 50% or 50 cents to every dollar up to 3% under primary match 2. But let's say that her employer is matching a specific dollar amount or percentage irrespective of her contributions. That is when we leverage flat dollar or flat percent match. So let's say her employer is actually putting $5,000 into the 401k, regardless of what else is going on for the 401k matching situation. We can indicate that from here and hit save. One thing that I want to note is that if we have indicated in step 2 under income that somebody's actually self-employed and receiving self-employment income, we can check off this box to indicate we should be looking for that income stream. It's not the case though for the Shroot, so we're going to leave that deselected and hit save. And we also can, of course, capture additional saving contributions. These are going to be future contributions going towards accounts. I just want to note. So under add savings, we can add additional employer retirement sponsored plans, whether it's traditional or Roths. We also have the after-tax 401k or the mega back for Roth conversions. We can also model traditional, SEP, and simple IRA savings, a couple different Roth IRA options, HSA savings, 529 savings, taxable brokerage savings, and under others, a couple miscellaneous options here, including our next versatile tool, which is the tax-deferred savings card. Now, this particular card is used to typically model a lump sum pension option. So if we have a client that does have the lump sum pension option and we wanted to capture that in the current plan, this is the card that we use to model that. So in that case, we would then specify typically the name to be that lump sum pension option, just to make it easier for us to know that this is referring to that particular benefit that Dwight is going to be receiving. We then enter the contribution amount that he'd be receiving. We then have it start and stop in the same year to show the one-time lump sum. And then we'd indicate towards which type of tax-deferred asset it's going to. And then when we're ready, we can hit the save button. And then up next, we're going to be covering step 4, which is going to be covering net worth. Now, net worth is where we go to capture the current picture for their account balances and also just taking a current snapshot of the building blocks or the foundations of their plan. So this is going to be capturing their assets and liabilities. To start to carve out their net worth, we can click on the Add Account button. From here, we can add bank accounts, credit cards, investment accounts, stock plans, loans. We can also account for additional properties such as investment properties, vacation home, or land in general. And under insurance, we have a plethora of different life insurance policy options. Same thing for disability, long-term care insurance. We also can model auto insurance and umbrella insurance as well. Now, under Other, this is going to be our next versatile tool today. The Other asset is going to be defaulted to the Other lifestyle asset. This is typically used to model things like those tangible assets like cars, boats, fine art, or jewelry. But from the asset type dropdown, we have a couple different options for what we can model here, such as a notes receivable or a business. So if somebody is a business owner, they own an LLC, for example, we'd select that from here and model what is happening with that business, especially if they're taking distributions from the business. In this case, though, for this family, we're going to be using the lifestyle asset type to model the family car that they do have. This is going to be their family minivan. So we're going to indicate that from here. For each of the balance sheet options, we are going to be entering names to make it easier for ourselves when we're looking at the balance sheet, and also, of course, to just add that personal touch. We can also specify the current value, the annual growth, whether it's positive or depreciating asset, which in this case, it is going to be depreciating. So we are going to be specifying that from here. We would then enter that cost basis and then indicate a year of sale if applicable. Now, we also can modify who we indicate as the owner, whether it's jointly owned or individually owned, and hit save. Now, up next, we are going to be capturing the bank accounts that they do have. So we're going to select Add Account Bank. From here, this is their joint checking. We're going to indicate that balance that they do have in the bank account. Then we can also specify the owner, whether it's jointly owned by the client, co-client, or is actually in a trust. In this case, it's jointly owned, so we're going to select that. But we also will find another option available throughout each of the different net worth entries that you might notice, which is the Included in Plan dropdown. So the default for a newly added account is that it is going to be included in plan, that it's going to say yes. When that is selected, it means it's going to be included across all different ways that it could be leveraged in the client's plan, whether it's the net worth statements, future projections, or anything in general. But from this dropdown, we can indicate no for included in plan. If we select no, this means that it will be marking this account as excluded from the net worth, and it's also not going to be included in any projections in the system. So we might select this when an account is closing, but we're not ready to actually delete it yet. Maybe we want to store it just for, the couple days it takes to close it. Maybe we're just debating actually closing it. Whatever the case is, you can just select that option. And we also have the option for balance sheet only. Now, with balance sheet only, what this indicates is that this account should be included in current net worth or balance sheet statements But when we are looking at future projections, this account's not going to be available to be tapped into, and it's not going to be impacting those projections. So it's solely going to be incorporated in current net worth statements, but not included in those future projections. In all cases, though, for today's data entry, we're going to be keeping yes selected and hit save. Now, up next, we are going to be entering the investment plans they do already have carved out, starting with their joint brokerage. So we're going to title this joint brokerage. There's a taxable brokerage account, so we're going to leave that selected. And we are going to be entering the total balance of what they have currently held away in the brokerage account. Since it is a taxable brokerage account, very important to specify the cost basis. Once again, very comprehensive tax calculation, so we want to make sure we're indicating that as needed. Then we also want to make sure we're specifying the owner. So right now it's selected as Dwight as the owner, but from this dropdown we can indicate this is owned by the client, co-client, jointly owned, or is actually in a trust. If we select trust, you'll see a couple of different types of trust populate from here, but in this case it's just jointly owned. And then since we're choosing to enter the total balance for this investment account, we want to make sure that we're specifying the asset allocation by clicking on the Customize button. The default for a newly added account is 100% other when we're entering the total balance. So if that's the case, we can leave it as is, but that is not the case for this particular account. So we're going to be entering a customized asset allocation, which means we're specifying the percentage of this account that is allocated to each of the different asset classes. When we're ready, we can hit save, and we'll see the asset allocation is 50-50. We'll hit save again, and then add the existing balances for the traditional 401ks. So we're going to click on Add Account Investment, starting with Dwight's 401k. We want to change the account type to a 401k. So we're going to use this drop down. We can either search for it if we wanted to, or just select it from the drop down. And then we're going to be entering the total balance and then specifying the asset allocation. Now we can either enter this customized asset allocation, or we can use the customized drop down once again to actually toggle to a model portfolio for this account's asset allocation. So from here, we can then specify which model portfolio we want to use. In this case, they're allocated in a growth portfolio. Then we'll hit save, and we'll see the asset allocation is now based off of that model portfolio for our reference. We'll hit save and do the same thing for Angela's 401k. So we're going to click on Add Account Investment, title this Angela's 401k, change the account type, make sure we're specifying the owner for Angela. But let's say we actually have a statement from Angela. We know exactly which ticker symbols or holdings that she has in this particular account. And if that's the case, we can actually choose to enter the account's holding/asset class. When we select that option, we can then select the Add Holding button to then start to enter those ticker symbols. And then the quantity that they do own. And we'll hit save and continue to build out the holdings from there. And let's say we either have maybe cash that's not yet invested in this account, or maybe a private fund that is not publicly traded yet. That's when we might be adding the Add Asset Class button and then specifying which asset class they're invested in. And we'd specify the value of how much they hold in this particular option and hit save. Now you will see that the asset allocation, when we specify the ticker symbols or asset class like we just did, or have a linked account, the asset allocation is going to be automatically based off of those holdings/asset class. We can click into this to see the exact breakdown based off of that. But I wanted to note that even if we have that linked account, or like we just did, that allocated account based off of the holdings, you always can come into this space and specify a different asset allocation. So if we wanted to specify a model portfolio for this or a customized asset allocation, we do always have that option. That might be when an account's currently being rebalanced or it's in the process of trading today. Whatever it is, you do always have that option available to you. Now that we've captured their current investments, we want to make sure we're capturing the current property that they live in and own. So we're going to click on the property button, and then we're going to click into the primary home. So we will see the primary home's already available for us to start to carve out and just say, where do they live? Do they rent a home? In this case, they own one. So we're going to select that option. Then we can specify the owner, whether it's owned by the client or in a trust. In this case, it's jointly owned. We can then specify the purchase price, the current value of the home, the annual appreciation percentage, annual property tax, the annual insurance that they're paying, and also the annual maintenance as well. Now, up next is where we can go to start to carve out what is happening with the expenses situation, or step 5, which does cover things like expenses, especially for a pre-retiree. We will see the pre-retirement living expense card here available for us. Now, with this particular card, this is where we capture living monthly expenses. One thing that I want to note is that any sort of expense we might have listed under net worth is accurately captured there. So we want to make sure this is different expenses than those. So what I mean by that is that if we did capture any sort of credit card payments, loan payments, insurance premiums, annual property tax, or any tax payments in general, those are all separate entries and are going to be captured in those appropriate data entry pieces we just did. So this particular living expense is going to be those more fun expenses. This is going to be things like going out to eat, going to see movies, shopping. It's going to be also some of those other non-fun things like paying for gas, utilities, and a couple other things as well. For this family, that's $3,000 a month. So we're going to specify that from here and hit save. And then up next is our taxes and fees card. Now, with the taxes and fees card, this is where we can control a little bit further the tax picture for the clients, starting with what we want to state is their filing status. So right now we're saying that they're married filing jointly, but from this drop down, we can indicate that they're actually married filing separately or that they are actually not married and filing single. Very important designation, both from a tax perspective, but also a couple contributions are going to be impacted from here as well. So very important designation. The next space is going to allow for us to enter a local tax if applicable. Now, the local tax is typically what the name entails, a local municipal tax. So places like New York City, San Francisco used to have a local municipal tax as well. It's another layer of local taxes on top of state taxes. So state taxes are a separate calculation. This is going to be exactly what that name entails, typically local municipal tax. We also have a space here to capture any average AUM fees that we want to apply to the portfolio return. Once we specify that, we can hit save. And then from here, we can, of course, capture additional expenses by clicking on Add Expense. From here, we can add medical expenses, alimony payments, or other expenses as well. I want to note that if we did enter any sort of debt, whether it's credit card, loans, we would also have the option to model debt payments, whether it's a short-term recurring payment or a one-time lump sum. In this case, though, we're going to be covering our other expense, which is going to be the final versatile tool for today. With the other expense, once again, what makes this a versatile tool is the tax treatment for this expense. So from the tax deductible dropdown, we can indicate if this expense should be considered a miscellaneous itemized deduction, a W-2 deduction, a self-employed healthcare premium, or an above-the-line deduction of sorts. And then once we specify that, we can also enter what the monthly expense is, who the owner is, and when it starts and stops as well. Up next is going to be the final step, which is going to cover goals for the client plan. Now, goals are going to be what we are planning for across our lifetimes, starting with our retirement age. So clicking into this card, we can then specify what age the family is planning on retiring. We can even get so granular as to specify a calendar month for retirement. So if we select this, this would prorate their income stream for that year and also some contributions as well. It's not the case for the Schrutes, so we're going to leave that deselected and hit save. Up next for retirement expenses, this is where we capture post-retirement living expenses. Just noting that anything that was captured in net worth for expenses, whether it's credit card payments, insurance premiums, mortgage payments, any other debt, or annual property taxes, those are all accurately captured from there. So these are going to be additional living expenses on top of those. And for this family, that's a retirement monthly living goal of $10,000 a month. And then we'll hit save. And then we would click into the next biggest expense in retirement, which is annual retirement healthcare costs. So with this card, we can control two different things. The first one is going to be when we expect for the retirement healthcare costs to start for both client and co-client. Right now, it's just tied to the retirement age. But if we have this starting prior to that or after that, we can control that from here. And the second thing is going to be what we want to see for the cost itself in today's dollars. So right now we're using the national average for healthcare costs, but we do have the option to enter a customized dollar amount. So if we know that, for Dwight, he's going to be paying only $3,000 a year, we can specify that from here. And the final option is to use a detailed estimate. Now, the detailed estimate allows for us to be a little bit more precise and also turn on Medicare premium calculations if we are looking to capture that. With detailed estimate, we'll see 4 fields populate. The first one is a pre-Medicare field. This is going to be relevant only if this cost is starting prior to the client's age 65. If this was starting prior to age 65, we would see pre-Medicare costs kick in then. Once they turn 65, we'd see Medicare Part B and Part D be calculated automatically based off the client's AGI. This is considering the 2-year look back that is applicable. And we also would see out-of-pocket costs on top of those. So the fourth and final field is an out-of-pocket cost field. This is typically things like Medigap coverage or outside coverage that they might be paying for on top of Medicare premiums. One thing I want to note is that if we have somebody that is not enrolling in Medicare Part D or is not paying for Medicare Part D, we can select from this dropdown that they're not enrolled. Now we'll turn off that calculation in the system. Once we're ready, we can hit save. The next important entry is the annual retirement long-term care cost card. This controls the long-term care event, starting with how long we expect the long-term care event to be for a client and co-client, whether it's the last year of their plan, that would mean age 95 for these clients, or if we wanted to start last 10 years of plan, so 85 and up, or if we wanted to indicate no long-term care event at all for this family. The second piece is going to be what the cost is itself, whether we want to use a national average for in-home care, assisted living facility, or a nursing home, or if we know that the clients may be reviewing a specific facility near where they live, that's when you might be entering the customized dollar amount. We say that in today's dollars, we know for Dwight, it'd be $90,000 a year. We can enter that from here and hit save. Now, since we did enter a child into the plan, we're going to see a college goal populated for him. So we're going to click into this card, and this allows for us to capture a little bit further what is happening with the education picture, starting with the cost of college itself. Now, from the college dropdown, we can either use a national average for cost, enter a specific dollar amount for the cost, or use a specific college lookup tool. Now, especially for this family, we know that they are going to be sending their child to Harvard. So we're going to be selecting Harvard from the list, hitting save, and we'll then be capturing that hefty cost of Harvard, certainly very different than an in-state tuition. And then we also going to capture additional goals by clicking on add goals, whether we wanted to capture additional education goals, whether it's pre-college or college, car purchases, vacation goals, wedding goals, property acquirements, other asset purchases, whether it's lifestyle asset purchase, maybe a boat, or a business purchase. And then under gift, we can capture personal gifts and also charitable giving goals. So that's another thing to be mindful of is if somebody is making charitable contributions, making sure we're capturing it with this card. We also can capture legacy goals and other goals as well. Now, this family is going to be following that very common scenario of downsizing and moving when they retire. So we're actually going to be going to property and selecting primary home relocation. So from this card, we will then specify what we're going to be doing in terms of how we're acquiring this new home, whether we plan on buying the new home, if we're actually inheriting the home, renting out a property, or moving to an existing home we might have. Whatever the case is, we'd select it from here. This case, they are purchasing a new one. So we're going to be entering that purchase price. And then a very important designation is the state location, because whichever state we indicate we're moving to is going to be what we use for state tax calculations when this goal occurs. And then from there, we'd specify when this is occurring, whether it's calendar year or tied to a life event, like Dwight's retirement. And we'd specify those other parameters for a property as well. And since we're purchasing a new asset, we can also indicate how we're paying for that asset. So if we're going to be paying for the cost 100% upfront when it occurs, we can keep the down payment here to 100%. But if we actually plan on financing this goal, that's when we'd specify the down payment, the total term, the interest rate. And then since we're moving out of our existing property or primary home, we would also indicate what we plan on doing with that existing primary home, whether we're converting it to a vacation home, a rental property to get some passive income, or selling that property. In this case, they are going to be selling the property and reinvesting proceeds. So we're going to select that and hit save. And now that we're ready and completed those 6 steps, we're going to hit the complete button, which is going to bring us to the full modules of RightCapital. Now, I want to stress that if we hit the complete button prior to finishing any of those steps, or if we forget information to enter, or the client lets us know after the fact that there's more to add, It is no worries because what we were just in was the profile section, and that was just highlighting each of these 6 steps for us. So we can always come back into the client's plan. We would just click on the profile section and then select the proper category that we want to modify. We will also see a 7th tab here under profile, which is the profile blueprint module. This particular tool is going to be a nice visual representation of all of those steps that we just entered. So here is where we'll see the visual representation of the client's net worth. We'll see who owns what their current net worth is. Under goals, we'll see the map of their goals across their lifetime. And under income, savings, expenses, we'll also see what we entered for their income, their savings, and expenses. So it's going to be just a nice visual summary of that information. Now, before we dive into questions, because I see there's quite a few, I want to highlight the resources that you do have available to you in RightCapital when leveraging our tool. So if we go back into our advisor portal real quick, if we click on the help button in the upper right-hand corner, that's going to bring us to our help center. We can find a lot of articles that will go over essentially either written instructions on the data entry process. It's also where you can go to find those integration articles or other ones that we reviewed today. But it's also where you can go to find our webinars. So whether you're looking to sign up for an upcoming one, or if you wanted to watch all of our recorded webinars, we also have a large library of content. So if you're looking to take maybe a deeper dive into pension modeling options, Medicare modeling in the system, or just a wide plethora of options, there's certainly no shortage of content that you can watch over the weekend. And then under contact us support, this is just going to list out the ways you can reach out to our fantastic support team. The first way that's ever present is the chat feature in the bottom right-hand corner that you can click into to message the team directly. Or you can call the phone number listed here for immediate assistance as well. You can also email them if that's your preferred method of communication, or you can book a dedicated one-on-one session. So you can click this link and book some time to set aside to either walk through a list of questions you have, a more complex illustration that you just want a second set of eyes on. Whatever the case, this is a fantastic resource that you do have available to you, because I did see a question about somebody wanting to have a second set of eyes on a more complex scenario that they're modeling. This is a great resource that you do have available to you.